ETFs are the way for most people to invest right now. And in today's video, I'm going to talk about 5 key reasons why I think more of us should probably be investing using ETFs. I personally use ETFs in all of my portfolios, including the one I'm making on this channel. And that's regardless of the fact I spend thousands of hours researching stocks, listening to people talk about the market, listening to podcasts, watching news outlets like CNBC and Bloomberg, and just in general loving talking about the stock market. I think more of us should probably be investing using ETFs, and I think these 5 reasons might help some of you realize why these should probably end up in your portfolio. Welcome to Golden Larch Investing. My name is Liam, and on this channel we talk all about investing. We are going to focus a little bit outside of just Canada today because we're talking about ETFs in general, but this does apply mainly to people living in Canada and the United States because a lot of the different ETFs I'm going to talk about are sort of localized to these areas, and a lot of the markets, when I reference the market in general, I'm going to be talking mainly about the American one. Of course, if you are outside of Canada, the United States, a lot of these same principles still apply to you, just there's going to be a couple of extra things on top of that I'm not going in depth about in this video. So if you're interested in this kind of content, if you want to learn a little bit more about the stock market, please leave a like, subscribe to the channel. It means a huge amount, costs nothing. So the number one benefit of an ETF is diversification. I feel like this must be the motto of the channel at this point because I talk about it so often, but diversification is super important for all of us as investors. It's like the old saying goes, you don't put all your eggs in one basket, because if you risk everything on one bet, you could lose. That does happen very often in the stock market, particularly if you're investing for the long term. You don't want to be a loser. And so diversifying or having many different stocks in your portfolio is a great way to make sure that doesn't happen. ETFs cut out all of the hard work for you. All you need to do is pick an ETF, continuously invest in that one single symbol, and you will have access to 10, 20, 30, hundreds, maybe even thousands of stocks, companies, and more, because ETFs have grown so much that there is an ETF for everything. And so essentially, regardless of what you want your portfolio to look like, there is an ETF option for you. Some of the big ones, we're talking market tracking or index tracking ETFs, S&P 500 ETFs, NASDAQ ETFs. If you're thinking about like specific factors, you could have maybe a dividend ETF. You could have a technology or a growth ETF, right? There are all sorts of options, and there's so many different companies providing interesting ETFs. Even if you're into something really specialized like covered calls, there's an ETF for you that makes it easy. This is the number one reason people should own ETFs, because they offer all of this. The number 2 reason goes hand in hand here, and that's they offer it all at a low cost. Traditionally, and I know this particularly in Canada, the way most of us invested when we wanted to have access to the general market was through a mutual fund. And these mutual funds were run by investment advisors from our big financial institutions, and they charged us so much. When we're looking at an ETF that's a broad market or an index fund, we're looking at a fraction of a percent, sometimes in the tens. So we're talking not 0.9%, but 0.9% when it comes to the expense ratios. When we're talking about a mutual fund, the old school way, the way our parents and grandparents did it, maybe 2%. And that's of the portfolio. So every year you lose out on a bit of your gains. Obviously, in the world where we want to compound our wealth, that's not a good thing. There's also just the general factor of having an ETF that doesn't have emotions. The cool thing about something like a market tracking or index tracking ETF is it doesn't buy low, it doesn't sell high. But it also doesn't buy high and sell low. If you want to look at an ETF that has done that, just look over at ARK Invest. They were the name once upon a time, but they were buying into names that were hot and losing conviction. Now, that's something all of us as stock market investors can do, lose conviction and sell it in an opportune moment. But if you pick a simple, low fee market tracking ETF, over the long run, as long as you stay consistent, you're going to be fine. So that low fee is actually going to be one of the things that has the biggest impact on your overall performance. If you kept the same amount of money in an ETF with a, let's say, 0.1% MER or expense ratio versus somebody who kept it in with an advisor at even a 1%, well, they're paying 10 plus times as much every single year for the lifetime of that portfolio to their advisor. And that's great for the advisor, but as the investor, that sucks. So the second reason is that low expense ratio. The third reason you might want to buy ETFs is because the market is growing and there are more options than ever. We mentioned this a moment ago, but ETFs are now everywhere and there are so many different kinds. Back in the day, it was probably worth paying that extra fee to a mutual fund advisor if you had very specific goals. Maybe you're really risk adverse. You can't afford to lose any of this money because you're going to need it in the near future. Having an advisor who can make that kind of decision for you, who can help you pick the right things to go in that fund and can take care of it for you, was huge. Well, now we live in 2024, where there are actively managed ETFs if you really want them, and there are ETFs that focus on specific factors. We mentioned growth and dividends. Let's just imagine you want to invest in something like SCHD, which is a dividend growth fund, but it's a dividend focused ETF. Well, SCHD is unique because their yield on cost is actually going to be better than most of ours. If I chose to invest in the exact same things that company had at a fraction based on my total investment size, I wouldn't get the same kind of yield on costs that they have managed to get because they've been doing it longer and they bought at better prices. So investing in something like that can actually provide you tangible benefits. And as we see more and more of these different kinds of funds come around, they can do all sorts of other cool things for us. I mentioned earlier covered calls. I don't know about you, but I don't necessarily want to spend a big chunk of my time every week picking the right calls and selling them on shares that I am willing to lose if things go against me. However, I'm much more likely to invest in a company where a professional does that for me because they actually can make those calls. That's kind of ironic. They can make those decisions and they can make sure everything works out. So that is our third reason. Number 4 is all about flexibility. And I think this is one of the best parts about ETFs. Again, I mentioned we're getting all sorts of different kinds of ETFs. Well, now we're also going to see all sorts of flexible kinds of investment. Think about maybe a fund that has some cryptocurrency as well as stocks, or where you can invest in stocks and fixed income, or maybe you can get in on things like limited partnerships without having to go through the tax hassle, or buying into preferred shares or other things that weren't really an option for most of us once upon a time. Well, now that these big providers are making ETFs for all this stuff, it's super easy for anybody with a brokerage account to get into these different asset types. Am I saying you should go out there and invest in alternative assets? Absolutely not. I have not researched that. I am not going to be recommending that on the internet. But if that's something you're interested in, it's easier than ever. And you don't have to actually be like digging through these things. You don't have to be a specialist in an area to have a little bit of investment as part of an ETF, as part of a diversified portfolio. I think that's awesome personally. Now, the final thing I want to talk about, it's the most boring thing, but they're actually pretty tax advantageous. Again, I mentioned at the start, we're talking mainly about Canada and the United States, but because of all sorts of different treaties, if I, as a Canadian investor, wanted to invest in a bunch of US companies, doing it through an ETF in a tax advantage account like an RRSP is probably the best way I could. And actually, it's something I have done in my public portfolio that I show every month on this channel. It simply offers a simplicity that you're not going to find if you make your portfolio yourself. It's going to simplify things for you. It's going to make it as streamlined as possible. You're going to benefit more from all sorts of different tax rules that I don't really want to talk about too much on the channel, but just putting it out there, it makes life easier when tax time comes around. So those are 5 key reasons why you might want to invest in an ETF. If you have another reason you think I missed in this video, please drop it down in the comments down below. I'm also going to be talking a little bit about ETFs in the coming couple weeks. We're getting into the Christmas season, so I'm going to have a couple videos coming out that are talking about some of my ideas going forward for 2025. And I'm going to be putting those out in the next little while. So look out for those. And if you're interested and you made it this far in the video, please like the video, subscribe to the channel. It means a huge amount to me, doesn't cost anything. With that being said, I hope to see you in the next one.